Gold just lost control, and if this level breaks next, we're not talking about a dip anymore. We're talking about a full market shift. And right now, the smartest money in the world is divided. Some are calling this the best buying opportunity of 2026, and others are warning that this could be the start of a much deeper collapse. And the scary part, well, they're both using the same data. So we know right now that gold has been one of those assets that's been up and down, and actually we're seeing some increased volatility on the back of yields rising and the dollar strength creeping in. Now remember, gold is essentially meant to be the hedge against geopolitical events and where people dive to in cases of war. But right now the market is asking one simple question: is this the reset? Or is this the beginning of the end? Well, there are two scenarios that we can play out, the bull case and the bear case. Let's start with the bullish case, because this is where things get dangerous. Central banks are still buying gold at record levels. Geopolitical tension hasn't gone anywhere, and if anything, it's actually getting worse. The biggest one here is rate cuts are still not expected. So we're waiting for if the Fed pivots, gold doesn't bounce. It simply explodes. But some analysts are now calling for a $5,400 to $6,000 gold, even higher if it happens. But we have to get there first because, well, some are even calling this the biggest trap of 2026. So what's the bear case? Well, the bear case is that energy rises and, more importantly, yields continue to go up. While yields go up, people are simply dumping risk assets like gold, like Bitcoin, and the dollar continues to strengthen. And the Fed, well, they still sound very hawkish. And the combination is pretty toxic for gold. Again, while we've got the purple bulls looking for a $6,000 gold, we have Wells Fargo repricing themselves in this year, and they're not the only ones. We're actually seeing more and more gold providers, gold liquidity providers are simply changing their price. They don't believe what has been said out there. The key line here is gold doesn't pay yield. So when yields rise, money leaves. And that's what we're seeing with a 30-year treasury hitting nearly 5%. Money is not going to sit in gold right now. And these are where the paper contracts and ETFs are getting liquidated. So everyone is watching one specific layer. And that layer right now is $4,400. If it breaks, momentum traders step in and this could accelerate fast. But this is where things kind of get insane, because you on the one side have got generational buying opportunity. The other side, though, is the beginning of a larger correction. And do I dare say it, the recession word. So same market, same data. So what is really happening and what do we need to understand here? Well, this is all to do with market psychology. This is where most people get it wrong. Markets don't move when everyone agrees. They move when there is maximum confusion. And right now, everyone's kind of watching what Trump's saying that Iran's going to finish, but Iran is saying something completely different. We right now are in peak confusion. So what happens next? Well, we're looking for economic data, PMI, jobs, inflation. This is going to drive the price of gold. And if the data weakens, gold's likely going to rip higher. And if the data stays strong, then gold could get crushed even further. So this isn't necessarily about gold right now. This is about where money is flowing. And if you're looking at banks and institutions, they are buying gold once again at record levels, but not paper contracts. That's just retail. Banks and institutions are buying the hard asset. Why? They've dumped the price significantly and now they are scooping it up. If we get the right side of this move, generational wealth, gold could rip to brand new all-time highs as fear in the markets continue to rise. However, if we don't, and we actually see the markets roll over, then this could be the biggest collapse and maybe even push us into that recession. So keep your eyes on $4,400 and more importantly, what is going on in that geopolitical tension in Iran and what the banks are doing, because that is going to tell us exactly what's coming next when it comes to the price of gold. As always, if you want to stay up to date with everything going on in this market, don't forget, check out some of these videos. These are on my main channel. And more importantly, hit the like and subscribe button, and I'll see you next time. Bye-bye.